Right. It is time to talk. I just want to welcome everybody here. This is Andrew Stotz, and we're going to be talking about the all-weather strategies, but also, well, it's raining really hard at my house here at Asok. I'm sure for many others, it's raining quite hard there. So hopefully we won't have any interruptions. Just say hi to everybody. I know seeing some people here. ABB, hello, good to see you. As you say, John Andrew, and also TT. Yep, good to see you. And we have Saratas. So good to see you guys, and good to see everybody on here. Tonight's going to be a interesting discussion because I'm going to talk about the strategy, but I'm also going to talk about war. And you're going to see some of the recent research that I've been working on, and I'm going to walk you through some of my thinking on what's going on in this world. And some people, it's going to give you some answer to the question that how much debt can the U.S. actually bear? You know, the U.S. government has brought on a tremendous amount of debt. It's now at $33 trillion. Can it go higher? Would it go higher? How could they do that? And how still have a strong U.S. dollar? I'm going to explain some of that in the research. So let's get started. I'm going to share my screen and get into this. So let me go into the presentation here. And first of all, remember to ask questions. And I love your questions in the chat. Keep them coming. And remember, we're talking about September. Our strategies are global, they're long-term, and they're diversified. Those are the key things that we're doing with all of our investment strategies. So I always like to start by saying, remember why we're here. We're here to build wealth over the long term. It takes a long time to build wealth. There's three pillars that I like to say of investing. One, to be broadly diversified. Two, to contribute regularly. And three, to stay invested. These are kind of the core principles that I like to talk about in my book, How to Start Building Your Wealth Investing in the Stock Market, which you can get online and also at bookstores in Thailand. So our goal is to deliver steady returns over the long run. These are our three strategies. AWS was launched in February of 2019, and we're targeting a 6% per annum return. Alpha Focus was launched in October 2021 and targets an 8% return. Remember, that one's more aggressive. Therefore, it also gets hit more when the market's going down, and when the market's coming up, then we can hopefully get a pretty good return. And it's important to note that almost since Alpha Focus started, we've had some tough times. So it's been a bit of a tough ride right there for Alpha Focus. But my opinion is that over the long run, that is the one for people who have the highest level of risk. And then there's Inflation Guard. That's the green line, which is meant to really be an alternative to deposits, something that's safe and aims for a 4% return. But whenever you're facing a downturn in the market, it's painful, and you're going to see some of that pain. Now, from when we started all-weather Inflation Guard in July of 2022, the strategies have performed almost as expected. Let's look at that. The moderate risk all-weather strategy has had the highest return. The highest risk, Alpha Focus, has had the lowest return, and part of the reason is the volatility. Of course, it's more volatile because we're having more equity exposure. And the hope is that as the market goes up, the volatility will drive up. And of course, all-weather Inflation Guard, the green line, has the lowest level of volatility. Now, since July 22, all strategies are below world equity, but with lower volatility. So it's been a rough ride recently. And part of where I like to focus for investors is to focus on the long term. I know it's tough when markets are down. Now, what do I mean by the long term? Well, I'm thinking about decades. And even a decade is not long term. This is when I was young. This is when I moved to Thailand, and this is me when I'm 100. The point is that we're trying to build strategies that perform over many decades. So we're going to go through a series of sections. In particular, I'm going to talk about my special research, and I'm going to talk about the U.S. fighting potentially six very expensive wars. What you can see here is when we review the first strategy, all-weather strategy, it was down 2.5%. Again, it was a painful month, the month of September. Also, Alpha Focus was down 4.1, and Inflation Guard was down 1.7. But that's what happens in down markets. And what I would argue is that it doesn't make sense to try to get in and out of the market, particularly during down times. It probably makes more sense to just stick it out through the market and then come out the other side. Of course, everybody would like to predict the market's condition, but that's very hard to do. Now, right now I'm talking about our all-weather strategy right now, and it's 85% weighted in equity. Here we can see since inception, it was up about 23%. And that's about 10.4% above a 60-40 portfolio. Here we can see the strategy was down 2.5%, which was 1.3% above the 60-40. That's in September. And our allocation to Japan did really well. Remember, we allocated 25% to what was the best performing asset class. Developed Europe did okay, but still was rough. And our allocation to the US, well, here we are. We were on the worst and the best side of this trade. Thank God we got Japan right in this period of time that offset some of the losses from the US. Now, Alpha Focus was painful. We're 85. There we are. For Alpha Focus, we're down about 15%. It's been really tough. And that's about in line with a 60-40 portfolio. So, from a benchmark perspective, we're about there, but still, that's down 15%. And if we bring world equity in, we're just slightly below world equity with, of course, Alpha Focus has less volatility. The red line has less of a drawdown. In fact, that's a pretty critical issue right there, is that most of the time when the equity market drops seriously, what we see is the red line, the all-weather Alpha Focus, doesn't come down as much. But still, it was rough. The strategy was down 4.1%, which was 0.4% below the 60-40, which was down about 3.7%. The strategy was about 0.3% above world equity. So if you had just bought equity, you would have been a little bit underperforming this. And out of our big tilts, only bonds and gold did better than world equity. Let's look at Inflation Guard. This was a big, down month for Inflation Guard. And here we can see that it's 25% equity, 70% bonds. So here we can see if you put 100 into Inflation Guard about a year and a month or so ago, it would be at 99. So the good news is that Inflation Guard does seem to protect the value over time. Now, if we benchmark against a 40-60 portfolio, keeping in mind that we've recently changed our bond, the bond portion of our portfolio and of our benchmark there, then it's looking a little bit better. The strategy has experienced less volatility. Here we can see the strategy was down about 1.7%, which is 1.7% above the 40% equity, 60% bond portfolio. So money market and TIPS held up the best, and the World Equity Fund we use in the strategy outperformed MSCI All Country World Index. So I'm just going to switch for just a moment back and see if we have any questions. I know you guys should have some questions with all that's going on. And let's just look at the first question from ABB. Israeli war is more important than Ukraine in the U.S. view. Yeah, in fact, I think what you're going to see is that Ukraine will not be as interesting to Americans right now because they're going to be focused on Israel. And so that's going to cause a problem for Ukraine. In fact, Ukraine may have to capitulate or surrender to Russia, I would say, if this continues in the Middle East. And I think that the U.S. has no competence. Let me explain the U.S. foreign policy. It's very simple. Joe Biden is a bit of a, old guy that doesn't really, he's not aware anymore. And the people behind him, like Anthony Blinken and Jake Sullivan, the head of national security, these guys basically are just causing chaos in the world. And the more chaos in the world that they cause, then the stronger the US dollar and the longer the US can be strong. So yes, I think that right now, the US is probably more focused on Israel. Pani says, hi, hello, John Andrew, good to see you. Thank you. Also, SCB Globe and SCB FST is the best for now. Yeah, right now we're in the SCB Globe. So, yep. All right, let me continue. And I want to talk about war. And I welcome any comment or question that you may have. Basically, what I see is that America is fighting 5 wars. And let's go through those wars. The first one is what I call World War 2.5. And that is America against Europe. That is America dominating Europe for the purposes of first cutting off, they did it by cutting off Europe from Russia. All the Russian oil and gas that comes out of the western part of Russia right here that used to flow into Europe has been cut by the US basically. And that is a major, major step that the US has done. And now basically the US controls Europe and they control NATO and they control the politics. They control everything in Europe. Why is that important? Because eventually the US is going after China and they want to stop any communications and trade between Europe and China. And they can't do it. Maybe Europe won't cooperate unless the US has total control. So the US has already had World War 2.5 against Europe and the US won. There's no politician in Europe that's standing up to the US, and I doubt there ever will be. Next, US is at war with Russia. Ukraine is just a sideshow. The objective is, and US politicians have stated it, the objective is to knock out Putin. Why do they want to knock out Putin? Because then they can get control of Russia, or at least get someone in control or leadership of Russia that the US can control. And remember, Russia is full of oil and gas and mineral resources. Those mineral resources are going to be necessary to have a green future. And Europe and the US do not have those elements that they need to have a green future. They've got to get them from Russia and China. Let's look at that for a moment. Here is the US against Russia. You see that blue country right there? Oh, wait a minute. That's not Russia. That's Ukraine. There's Russia. And the US is trying to go through Ukraine to get at Moscow and ultimately get at Putin. And this is war number 2 that America is in. It's very expensive so far. It's cost $100 billion or so. And how do I say that there's a war against Russia? It's simple. You can go on the internet and look at the national defense strategy of the US Department of Defense. And what do they say? The US Department of Defense thinks Russia aims to split NATO and expand into Europe. Here we can see they see an acute threat posed by Russia. And they say, contemptuous of its neighbor's independence, Russia's government seeks to use force to impose border changes and reimpose an imperial sphere of influence. The imperial basically means that they're arguing that Russia's trying to expand into Europe, which is ridiculous when you think of how much Europe is trying to push against Russia. And here you can see that they intended to fracture, what they're saying is Russia intended to fracture NATO, and that's backfired. And also, of course, there's the nuclear threats to the US homeland. Russia is one of the only countries in the world that has the capability of launching nuclear weapons that can destroy major cities in the US. And at the bottom, you can see, although diverging interests and historical mistrust may limit the depth of their political and military cooperation, the People's Republic of China and Russia relationship continues to increase in breadth. Either state could seek to create dilemmas globally for the joint force, meaning the US, in the event of US engagement in a crisis or conflict with the other. So they're driving these two countries together. Again, these guys, not only are they creating chaos, they're so stupid that they're actually destroying America's dominance in the world. Now, I want to highlight Anthony Blinken's interview a couple of weeks ago on a news show. Now, one of the critical things that's happened in relation to war between US and Russia through Ukraine is that many people in America have been worried that if the US government gives the Ukrainians long-range missiles, they're going to fire them into Moscow. And if they fire long-range missiles into Moscow, Putin's going to say that is an attack on our country, and now it's war. And that is World War III. And ultimately, that could potentially happen. So the wise men and women in American government and politics know that you don't give long-range missiles to the Ukrainians because you run the risk that they're going to fire them at Ukraine. But here's this idiot, Anthony Blinken, the Secretary of State, who really is a dangerous man. And he's being asked by a news reporter very carefully about this. And Anthony Blinken just doesn't care. He will start World War III. Let's listen to what he says.
Missiles 200 miles in range. Are you okay if those missiles allow Ukraine to attack deep into Russian territory?
In terms of their targeting decisions, it's their decision, not ours.
So what he's saying is that if they give long-range missiles to Ukraine, then he's fine with Ukraine firing them into Moscow. This is the type of people that are running America now. They're at war with everybody. So the third war is China. Of course, we've already talked about Ukraine. We've talked about Europe. We've talked about Russia. And now, of course, there's China. Now, what does the Department of Defense say? They say that China is the number one challenge for the U.S., meaning enemy. What do they say? It's a serious challenge to U.S. national security. And they say that the People's Republic of China seeks to undermine U.S. alliances, security partnerships, and all that. And the PRC is therefore the pacing challenge for the department, meaning it's number one enemy. And the U.S. sees the threat of China getting nuclear power. Here's what they say. The People's Liberation Army seeks to target the ability of the U.S. joint forces to project power to defend vital U.S. interests and aid our allies in a crisis or conflict. So what they're saying is that the PLA is trying to weaken the U.S. military. And in parallel, the People's Republic of China is accelerating the modernization and expansion of its nuclear capacities. The United States and its allies and partners will increasingly face the challenge of deterring two major powers with modern and diverse nuclear capabilities, the People's Republic of China and Russia, creating new stresses on strategic stability. What is the fourth war? It's the war on climate, and this war is more expensive than all the other wars combined. This is a crazy expensive war. What does the military say? Climate is changing, and that will require the U.S. military to be more involved in domestic affairs. One of the key features of the United States compared to Thailand and many other countries around the world is the government can never use the military except for attacking foreign enemies. They cannot use the military in the country of the United States against American people. But here the military is saying that this will increase demands, including on the military force, for disaster response and defense support of civil authorities. What does civil authorities mean? Basically supporting politicians and other people. And here they say that this insecurity and instability related to climate change may tax governance capacity in some countries while heightening tensions between others, risking new armed conflicts and increasing demand for stabilization activities. Basically, stabilization activities mean policemen of the world. The U.S. military is basically saying they're going to get involved in domestic affairs in the U.S. and because of climate, they're going to have to be more of a policeman of the world. I have a prediction about the U.S. In the next 5 years, everybody around the world is going to be paying a tax to the U.S. government, Thai people and others. That's my prediction. It's kind of a crazy, bold prediction, but that's what I'm thinking. Now, I just thought I would run through the top energy producers to try to understand what is this battle for energy. For those of you that have heard about things like ESG and you've heard of things about sustainability and you've heard about climate and all that, to me, that is just bullshit. That is just talk by the US government and propaganda, and everybody falls for it. But truthfully, what America is after is to control energy. If you can't control energy, you're in trouble. How are you going to run your economy? So let's look at the top energy producers. Number one in the world is China. They produce 22% of the world's energy production. Now, when I'm talking about energy, it's more than just oil and gas. So also you can see the US produces about 16% of the world's energy, and Russia 11%, and Saudi Arabia 4%. So you can see China, US, and Russia are the key players, and that's who America is going to war with. And then, of course, there's smaller countries, as I mentioned here. What about the top energy consumers? Well, China at 27% is a major energy consumer, more than they produce. The US is consuming about the same that they produce, and Russia consumes less than they produce, and therefore they export. India is a major consumer and they don't produce. And then you can see some of the other countries here. Now, what about the major net energy consumers? So this is net of production. China is a consumer, a major consumer. Japan, India, Korea, and Germany, Italy, France, and Turkey. These are all countries that rely on the import of energy massively. And here are the top 7 net energy producers. This is Russia and Saudi Arabia and Australia and Canada. These are the countries that on a net basis are net producers. So we saw that Russia produces a lot and they consume a little. Canada produces a lot and they consume a little. Australia produces a lot, particularly coal, and they consume a little. And then there's Indonesia and Iraq and Iran. This is war, right? For some people, they believe that climate crisis is a war, and the U.S. Department of Defense believes that too. On the 17th of September, there was this march to end fossil fuels in New York City. And here is some picture of what was going on there. So what are governments going to do about it? Well, they're going to spend a massive amount of money on alternative energy sources and many other climate initiatives. But a friend sent me an interesting meme I'm going to show you in just a second. But the U.S. invested trillions of dollars in solar and wind in the past decades. Trillions. And we can see that coal, petroleum, and natural gas make up 80% of energy sources in 2000. and they make up 79% now. So wind and solar went from 0.1 to 5.7 after trillions of dollars of investment. There's simply no way that wind and solar can provide the energy that's needed. Here we can see the red bar, it's only 5.7%. And China is and will remain mainly coal, but renewables are high. Renewables in China are higher than they are in the US, and nuclear, I think, is on the rise. And Indonesia is China's main source of coal, then Russia, then Mongolia, but Australia also was a main supplier, but there's been a trade ban. Now, this chart is what's critical. If it's above the line, then the country's in good shape, and that's Russia. Their net energy consumption is actually positive, not negative. But look at China as another example, the red line. It's net negative consumption, meaning China is having to import and import and import. The other one that's interesting in this case is India, that just keeps going down and down and down. Again, same situation as China. They have to import a lot. Now, I went through all the different organizations I could find and added up their estimates of the climate spending. And we're talking about between 29 and 122 trillion dollars. Remember, we've only given US has given $130 billion to Ukraine. It's nothing. The climate spending is going to be unbelievable, and it's going to break the bank of the US. So finally, and this one explains why the US is going to go in debt massively. Finally, the fifth war is the US. Civil War in 1861 to 1865 was the Union States against the Confederate States. It was a geographically split country, and this western part of the country didn't really matter as much. It was this split, and this is what we see now. Red equals Republican and blue equals Democrat. What we can see is that the Democrats control California and some of the Northwest, and they control a lot of the Northeast. These are powerful centers of power. But in the middle of America, it's almost all Republican. And so the question is, how do you have a civil war? Could it be the coast versus the inland? Could it be urban versus rural? This is the next report that I'm working on that I'm going to come out with in December. So actually, I could be wrong. It may be 6 wars. And that's a war, let's say, with Iran. Now, we've seen Hamas has launched a surprise attack on Israel. And the Wall Street Journal, that's a propaganda arm of the, along with NBC, which is Joe Scarborough here, these guys are propaganda arms of the U.S. government. They're going to push out whatever the U.S. government is saying. And the U.S. military is moving ships into the Middle East. And that is, terrifying. We're the closest to World War III that I've been in my lifetime. So the point is the U.S. is fighting 6 very expensive wars. 5 wars against Europe, Russia, China, climate, and the U.S., and now possibly Iran, Palestine. The cost of these wars will be multiple trillions of dollars and require continued massive spending by the U.S. government. So expect the U.S. government to use all means necessary to maintain worldwide military dominance. Now, before I go on from there, I just want to see if we have any questions. Let me see. Hold on. I'm going to share some of the questions. And first of all, say hi. There's Cherry Blossom. Nice to see you. Anucha says, given the new conflicts arise, will the recession become more likely? I think that a recession is very highly likely by the end of this year. The challenge, Anucha, is how does that affect the stock market? Remember that the Fed comes all the time to pump money into the economy and reduce interest rates. If that happens, the stock market could fly. Chawin says, good evening. Well, good evening to you too, right? And ABB says, a dangerous man. Anthony Blinken, Kevin McCarthy, they are dangerous people. And, you can stop all of this stuff going on around the world by talking. If America demanded that sides come together, or they proposed that sides come together and talk, people would come together. They can use their soft power, but they don't. They just want to cause chaos. All right, let's continue on and see what else we've got. If you've got any questions, feel free to ask. Dong says, Sawadi Karap, Ajahn Andrew, good to see you, Dong. All right, Anucha says, very informative view on energy. Does this mean energy costs will be on the hike soon? Definitely. I think energy is going to go up in price and up and up and up. Don't be fooled by the ESG, or what I call bullshit ESG. Everybody's talking about it, but come on. We just had an explosion of a gas pipeline done by the US. Everybody expects that the US did it. Joe Biden said they're going to stop the pipeline, and then they blew up Nord Stream and caused the biggest man-made environmental spill in our lifetime. And what is anybody doing about it? Nothing. They do nothing. Zero. They don't care about the environment. They only care about getting their agenda across. Now, what they've done over the last 5 to 10 years with the energy companies is they basically try to starve the energy companies from money so they can't invest. And now there's underinvestment. In addition, you got Saudi Arabia and Russia controlling APEC and reducing production. And ultimately, that's going to cause oil prices to go high. Now, I do want to mention, Anucha, and to others listening, be careful when you listen to any analysts like myself, because we talk about our ideas and we talk about things that in a strong way. And so it makes it seem like, oh my God, I'm going to got to get all of my money into this or all of my money into that. But that is not the way to manage a portfolio. You want to tilt a little bit here or there, but don't go to extremes. All right. Next one, ABB says, who will be elected U.S. president to lead wars 5, 6, and 7? ABB, I want to tell you that I haven't come to my conclusion yet, but I'm very close. In December, I'm going to publish and talk to you about my predictions for the election. We're still a little bit less than a year away, or let's say more than a year, because it's November 6th or so that the election's going to happen in the US. So we're still a year away. So give me a little time, but I'm going to have some predictions, and you're going to be shocked by those predictions. All right. Anucha says, regionally, is Asia market interesting? I think so. I think that there's a lot of underlying strength in the Asian markets. In particular, Southeast Asia is still strong. And in some ways, you could argue that Asia is somewhat neutral and just getting along and getting on with things. India is a good example, and other countries in Southeast Asia. So Surata says, U.S. stocks still attractive? It's getting interesting. I would say that the big tech companies have so much power that they're maintaining their profitability. It's remarkable. So that's the first thing. The first thing we have to try to do is see, is tech losing its profitability? And so far, they're not. If Republicans come into power, tech could take a hit because Republicans are going to go after the tech companies. I think anybody who studies about the election in the US, if you observe what happened with Google and its impact on the election, you'll see why many Republicans feel like the election was stolen, and that's why they talk about it. But also keep in mind that the US small cap companies are very cheap. So if you can get small cap companies in America, that's very, an interesting play right now, and value companies. Now, we don't have access to that through the mutual funds that are available in Thailand. So I can't really play that, but in an ETF portfolio, you could. Let's see. What says, what is the chance of recession this and next year? My prediction is 75% chance of recession by the end of this year. And my prediction is 100% by the end of first quarter. So I feel very strongly that we're going to have a recession in the US. again, you want to be careful because just because we have a recession and it's bad doesn't mean the stock market couldn't go up. If the Fed stops hiking and then starts lowering rates, it could send the markets higher. Yes, the U.S. is fighting wars on many fronts, but, Anucha, Americans think, particularly American politicians, think that they're good people, they're righteous wars, they're good wars, they're to help humanity, and therefore they see that they're necessary. But I think that the fact is they're extremely dangerous and they're extremely expensive. Yeah, Vivek is interesting. I interviewed a guy that has that knows Vivek, and I interviewed this guy on my podcast, and it was interesting talking to him. But I would say Vivek is a possibility. He's a little unconventional for the typical Republican. I mean, he's pretty aggressive, and he wants to shut down the border and shut down the Department of Education and shut down the FBI and the CIA or that type of thing. And I think that probably is needed in America, but I don't know whether he's going to be able to get that support. Yes, Super Gone, good to see you also. Let's continue on, and I'm going to go back to my presentation, and let me continue on with that. And I'm going to just talk about some general things. So equities, well, central banks battle inflation while trying to avoid a severe recession, and recession versus no recession debate continues. Sentiment seems to be in favor of the latter, meaning there's not going to be a recession. That's been consensus. Over the last couple of days, it may have shifted, but that's been consensus for a while. And if the Fed pauses and or starts coming down, that could support or actually drive equity. Here we can see oil prices rebounded. Oil price is the green bar or the green line, and that creates inflationary pressures. And though if the oil price continues up, it could reaccelerate inflation because oil price correlation with inflation is very high. You can see it in this graph, right? When oil price shoots up, inflation shoots up. When oil price shoots up, well, we got a kick in inflation right there. And when oil prices start to come down, we see inflation come down, oil prices rising, inflation rising. So generally, oil price going up means inflation's going up. Now, the 3-month government bond yield has risen to about 5.2% from 3.4%. And central banks have been trying to battle inflation without causing a severe recession or a banking crisis. And rates have come up quickly. In fact, so quickly, it's dangerous. The yield curve inversion has dived deeper, and watch for the turn that seems to have begun. All recessions in the U.S. since 1968 were preceded by an inverted yield curve. And the average time from inversion until recession started was about 1 year. That was 1 year ago. That means fourth quarter. So let's just stop there to think about that. What I'm saying is we're going to have U.S. recession in fourth quarter and U.S. Fed to lower rates to zero at the end of this year or the end of first quarter. That's my prediction as of right now. Let's go back to the presentation and continue. The market expects a continued pause in November. In fact, the market is pricing in a 78% probability for a continued pause at the next FOMC meeting. And a pause could mean a delay in the recession. And a pause could also be positive for equity markets. Now, here we can see the U.S. is at peak employment. It's the lowest employment since 1969. And that puts upward pressure on wages, which is inflationary. On the flip side, of course, a strong labor market can keep the recession at bay. But if I look at the record here, unemployment down, meaning full employment, recession, down, 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 no recession. I think we're going to see a recession. Bonds are typically a safe place to be, and global bonds being diversified brings diversification benefits to the portfolio. So in recessions, safe or assets like government bonds typically have performed well. And though with high inflation, low yields could still lead to negative real returns. And we generally don't allocate the bonds to speculate on the upside, but rather use it to protect capital over time. And here we can see that global bonds bring diversification. This is the master fund of the SCB GLOB. And what we can see is that it's not 100% correlation with the stock market. It's not even 80. It's not even 60. It's not even 40. It's about 35% correlation with the equity market. And that helps us with diversification. Well, oil price has been strong and food prices have softened. Commodities have rebounded due to oil, but too early to call the turn for the group. Oil price has been strong for sure, with some technical support. Saudi Arabian and Russian cuts could keep supply tight, and the Israel-Palestine conflict could lead to higher oil prices. And if demand is sustained, there could be further upside in oil price. Here we can see that oil price has driven commodities in the second half of 2023. So we're breaking this into commodities into energy and non-energy. And we can see that energy has outperformed the blue line and non-energy, the green line, has underperformed. And so basically it's all oil price driven for this. And food prices have softened now. They continue to fall. And commodities have rebounded due to oil, but too early to call, right? The global economic growth outlook remains uncertain, and the main upside in commodities would come from a supply shock, adverse weather conditions, or significantly higher demand due to an improved growth outlook. And there's gold. Central banks have been loading up, and gold protects value in times of uncertainty. And finally, the technical support for gold isn't bullish. Central banks have been loading up on gold, maybe switching from US dollars. Here we can see 331 for first half of 2022, and that's already a high number. Of course, that's first half of 2023. If we do that each quarter, we multiply it times 4, we're talking about basically 700 or so total. So the recession risk remains, and in general, gold protects value in times of uncertainties. What's the risk? Well, central banks' aggressive rate hikes in QT could crash the stock markets, and continued rate hikes globally could lower bond yields. And if inflation reaccelerates, we could miss out on rising commodity prices because we don't have exposure there. Now, before we get to the Q&A, remember the next Valuation Masterclass Bootcamp is number 12, and it starts on November 6th. And our limited super early bird price is still available. And with Phenomena, you save $100 extra. All they have to do is scan this QR code or just go to the website valuationmasterclass.com/bootcamp and use the first question is, and feel free to ask any questions. We're almost out of time, and I'm happy to answer any questions that come in. ABB said, any suggestion about U.S. small cap in what sector we should study or avoid? I wouldn't get too detailed about the sectors for small cap. I don't think you're going to have a lot of options there, but even if you did, it's probably better just to go with either a small cap or small cap value ETF. I haven't looked at those recently, so I can't give you specific ones, but that's what I would look at. Small cap or small cap value ETF in US. You can look at anything that relates to the Russell 2000 because the Russell 2000 is outside of the 1,000 most biggest companies. Gorn Hatai says, good evening, Ajahn Andrew. How will it affect Europe the most for higher energy costs? Does Japan survive or more attractive? Yeah, I mean, energy costs is going to hurt Europe. They're not an energy producer. They're an energy consumer. Now, you could say that they're going to have access to U.S. energy, but I don't think the U.S. is giving them any discount on that. And Japan, I would say at this point, also from an energy perspective, Japan's a major importer. But for right now, I'm not going to make any changes to the Japan strategy. So there's the link in the code there that you can get for the Valuation Masterclass Bootcamp. In case you're interested, you can ask us any questions there. All right. Are you I wasn't sure what that meant, but okay. Are you a single man? Are you a pet lover? Are you okay. Thanks so much. It's a lot of info to monitor closely. It definitely is. And just because you monitor it doesn't mean you're going to call it right too. So don't overwhelm yourself. Keep it simple. Keep your questions coming. We still have a little bit of time before I'm going to go off. Any possibility for bot to appreciate soon? No, I think that we're going to see bot depreciation. And why is that? Because more strong dollar, the more chaos that America can make in the world and not resolve conflicts. You can see the chaos that they're creating in their own cities. Then it makes the dollar stronger and it makes a shortage of dollars ultimately. And so I still think we're in a phase of strong dollar. That means weak baht. I think there's also another problem that we're facing, and that is there is a risk that China goes into a devaluation of its currency, and Thailand would have to devalue its currency to some extent to stay competitive. So that's what I'm thinking there. I think the dollar is eventually going to start to fall, but we could be 1 to 5 years away from that. And, during that time, as the dollar stays strong, it means a weak baht. All right. Any other questions? That was a lot of stuff that we covered, particularly the 5 wars plus the latest war, number 6. The main thing that I would convey to everybody is that my strategy is set into a formal process. It's called FVMR. And we reconsider all of our investments every 3 months. We will occasionally do something in between the 3 months, but only if it's something significant. So if you're following the AWS or Alpha Focus or the Inflation Guard portfolio, try to follow along and not get the emotion of the roller coaster ride of the market and cause you to get in and out and in and out. It's very difficult to perform that way. Ultimately, we need to be in the market for the long term. I'm going to stop there and thank everybody for coming. I was happy to share my 5 wars. That's some of my latest research. And, anybody's welcome to ask any question before we wrap up, but I appreciate everybody come. Any stock or fund that's a war hedge. Yeah, again, going back to ESG, look at defense companies in America. And basically, you'll see that defense companies have been moving up. And so defense companies have been a good war hedge against a hedge against war. Yep. That's it for tonight. I want to thank everybody. My mom's asleep right behind me. She went to bed just before we came on the show. And I've been up since 3 in the morning, which is when I get up most days. And so it's been a long day. So I'm going to head out. Katie, Kate, what sector is driving India economics and the market trend there? I think the domestic and the consumer sector is strong in India, and India is not that strong on exports, though it's picking up. So it's really a domestically driven economy. The problem is if you're investing in Thai mutual funds, you don't have the option of having various different sectors to invest in. So that's a challenge I find with my strategies. All right, that's it for tonight. You guys have a great evening, and hopefully we'll see you soon. Stay the course, stay on track. Don't let the emotional roller coaster of the market shake you. Have a great evening.